Tom Lee just reminded us that in every US election year, the stock market follows an eerily precise pattern. I'm talking about specific sectors that consistently outperform, creating massive wealth-building opportunities that only come around every 4 years. So Winston told me, make a video and show people how they can consistently outperform if they know these things. So in the next couple of minutes, I'm going to break down the very sectors, the very stocks, the very tickers that are very likely to outperform massively pre-election and post-election. I'm going to give you 7 stocks. Actually, there is an 8th bonus stock that surge during election cycles, and it's backed by hard data from none other than Winston and Tom Lee. And you know, when I first found out that there are these patterns in the market, not just during elections, but like all the time, I didn't believe it. But I had the very good fortune to be a banker for a little while. I worked in an investment bank, and I learned a lot about these rules and strategies from my boss. Why did you teach me? He was a very kind soul. He probably just wanted to get a bigger bonus and for the team to do better, and then he would get a bigger bonus at the end of the year and he could buy, I don't know, a second Ferrari or something like that. So understanding these rules is what allows me to spot breakouts just before they actually happen. And allows me to therefore be up tremendously over the year. We're up over 100% so far this year. So if you want to learn what those strategies are, Winston's recorded a 35-minute masterclass for you, which you can watch right now for free. Well, at the end of this video, otherwise you're going to miss something extraordinary. Imagine what he's going to do. He'll be juggling by the end of it. And where can you watch that? At felixprehn.org/get-free. Why am I putting that out? We've got this crazy plan to make 1 million people financially free, and therefore I give away like 95% of my investment knowledge right here on YouTube. So check it out, felixprehn.org/get-free. So what's with the deal with elections? Why does the stock market tend to end much higher? And how can you position yourself to benefit with these 7 stocks? Well, there is the 8th bonus ticker as well. Right now, the betting markets are painting a picture of Trump leading Harris. And you may or may not like or loathe Trump, don't care. Put your politics aside and focus on making money, because that's what this is all about. Since 1928, 83% of election years have ended higher. It's not a coincidence, it's a pattern. And the day after the election, the S&P typically rallies really, really strongly. And then we look at Tom Lee's research. And we'll also look at 2016, because that is, well, when Trump was last winning the election, which is what Wall Street is currently predicting. And we had some really extraordinary moves after 2016. And right now, we're seeing similar patterns that we saw pre-election, and therefore we have potentially the same glorious opportunities. If you're thinking whether you should care, well, the bonus ticker went up 2,019% during Trump's last term, so it might just be something to understand. So Tom Lee considers the crown jewel of election year investing to be small caps. After the 2016 election, the Russell 2000, ticker symbol IWM, surged like 13% plus, while the small cap 600 jumped even higher. So why do small caps react like that? Well, they're basically pure plays on domestic economic policy. These companies typically get 80% of their revenue from America. So when domestic policies shift to be more pro-business, less regulation, less tax, these guys benefit. And Trump is proposing yet another round of corporate tax cuts, which will very much benefit those small caps, as they typically pay higher tax rates than the larger counterparts. They just have better accountants and dodgy lawyers. Did I say dodgy lawyers? I didn't mean that. I mean extraordinarily clever and well-educated lawyers. Think you got away with that? I think so. And then, of course, there is deregulation. There's also the promised infrastructure spending, and we're talking about billions flowing directly into domestic projects. Small caps, especially construction, materials, industrial services, stand to benefit tremendously. Now, as I'm standing outside, I'm not going to open stock charts for you and run you through them, but what I'd recommend you do is go to tradevision.io, which is the platform that we build, and look at what the indicators tell you there, because that's usually very, very helpful. We give you clear entry and exit points, we send you emails with alerts, and we also give you support and resistance levels, which are based on what market makers are doing. You can even see dark pool trades. You can spy live on what big Wall Street is actually up to. So small caps, number one. Second sector is the financial sector, and that sounds boring, doesn't it? Well, if you were a former investment banker, you might not think it's quite as boring. The ticker symbol we're looking at here, thanks to Tom, is XLF. Went up about 16% after the 2016 election, and that is a reflection of the perceived, well, I was going to say lobbying by Wall Street, and they might be closer to a Republican candidate than a Democrat. But either way, during the Trump, since 2016, those financial stocks have gone up 120%. So that's pretty juicy stuff. And where we are right now is in a high interest rate environment. Rates are going to come down. Banks benefit more, make more money from their loan portfolios. And when those rates come down, it also takes the pressure off their commercial real estate portfolio, which is a total disaster pit right now. So I believe that financials, as Tom Lee does too, are going to outperform here. Why? Well, just credit growth, right? Lower rates, more credit growth, more spending domestically, again, more credit growth, and banks make more money. We would also expect M&A activity to kick off, which brings those lovely banksters lots of fees and, lots of posh dinners and that kind of thing, extra steak. There's also been a lot of push to regulate these big banks more under the current administration, and that might be a little bit more lax when and if a Republican comes in. As for the chart, look it up on tradevision.io, type XLF in there, and then you can just look at the simple chart, or you can look also at the advanced chart, click on the top right, and that will then show you support and resistance lines and everything else. Staying in financials, Tom Lee's next sector are regional banks. They did insanely well in 2016, and they might just repeat that performance. They went up 25% plus after the 2016 election. Was that good luck? No, not really. Those small banks are the ones loaning to local businesses. They handle mortgages for your neighbor. They're really the Main Street banks, and they get very, very affected if Main Street does better. Now, right now, again, we're in this high interest rate environment. Everybody hates small and regional banks at present because they have this toxic mortgage portfolio, especially commercial mortgage portfolio, and all of that will be fixed by interest rates coming down, so they will be embraced and smothered and kissed by Wall Street. The next sector is industrials. Again, sounds fascinating, isn't it? But we're going to get to the 2,000%er in just a moment here. The ticker there that Tom Lee recommends is XLI, and it doesn't sound particularly thrilling, does it? Went up something like 7% after the 2016 election. Sounds a bit measly, but the real value here lies in sustained growth that followed after the initial 7% jump. And both candidates, doesn't matter who wins, are basically proposing massive infrastructure investments. We're talking bridges, roads, airports, that kind of thing. So industrials, materials, construction should do very, very well. On top of that, you've got the whole reshoring trend, which is accelerating, bringing manufacturing back to the US. Now let's explore a bit more of a modern sector, perhaps. Wasn't around 20 years ago, really, in the same form. What's Winston thinking? He just showed up here. We're looking at the crypto sector. And in previous election cycles, what's about to happen would have seemed impossible. Bitcoin rallied over 2,000% during Trump's last term, I kid you not. Now, he has hinted he'd create a US strategic investment in Bitcoin, which could see a massive rally, could trigger tremendous rally. Maybe not quite 2,000%, but certainly an end to the hostile SEC towards crypto, and Bitcoin being becoming an accepted staple of every portfolio is an outcome that seems very, very likely. So how do you get Bitcoin exposure? Well, you can either buy some Bitcoin in a wallet if that's too much for you. You can buy a Bitcoin ETF. There are plenty of them out there. Or you can look at some stocks that are very, very closely related, sort of proxies, if you will. MicroStrategy is one. MSTR. This is one that Tom Lee likes. It's essentially a Bitcoin holding company, with a not insignificant enterprise software business. There is also a smaller player you could look at, which is SMLR. Now, while MSTR is direct Bitcoin exposure, SMLR represents sort of the infrastructure and technology side of digital crypto assets. And crypto's done tremendously well despite complete insecurity around what regulation looks like, lawsuits, all that kind of stuff. And now we're entering a phase of clarity rather than restriction, which could bring in a ton more institutional money. But if holding crypto directly is too much for you, you can just buy these crypto proxies, which give you regulated liquid exposure to the same space just through your usual brokerage account. Nothing fancy there. So how do we put all of this together? Now, the crucial part is position sizing. Don't go nuts on one single thing. Not every trade works out, and therefore you're going to want to make them smallish. And you could start setting these up pre-election. Keep a little bit of powder dry with some cash reserves. And then as election results come in, you could punt more heavily on the ones that seem to be playing out given whoever wins the election. But the most important thing, I would argue, is actually the chart. The chart tells you everything. If you don't know anything about the company or the economy or the election, just watch a stock chart, because it's a summary of the actions of millions of people, of every fund, of every hedge fund out there, and therefore it's all in there. So what do you have to do? Well, all you really got to do is understand how it works, spot the breakouts, learn risk management, all of that good stuff. So watch the masterclass I put together for you, because it'll genuinely provide you value, which is why I do it. So felixprehn.org/get-free is where you can get your pause on that. And I put it out there because I think you deserve to get free. I think nobody should work a wage slave job. I've done it. It's horrible. And now I can just hang out with Winston. So there we are. An insight into Tom Lee's mind with a little bit of interpretation from Winston. If you got some value out of this video, share it with a golden retriever. And I hope to see you on the next one. Everyone's always looking for the next Tesla. Why? Because, well, if you bought Tesla at $15 here, you'd be right now, well, just very rich.